All right, what's up, y'all? We're back at it. Another episode with Curtis G. Now, I'm getting back into detailing my long-term portfolio, basically my dividend income portfolio, how I'm building it out. Now, if you've been rocking with me for a while now, you know that I started my long-term portfolio a few years ago, cleared it out to pay off some debts, and then found myself in the back in the same position. So cleared out my portfolio, paid off my debts, brought myself back to zero. And here I am again, starting off the long-term portfolio, the dividend income portfolio. And of course, I'm all about transparency. So what I want to show y'all is how I'm building out all of my investments, the things that I'm looking for, and giving an update week to week, month to month, quarter to quarter, year over year to show the performance of the things that I've invested in. Now, the biggest or one of the biggest holdings in my portfolio is Visa. And if you've been on any of my TikTok lives, you've been on any of my webinars, any of my classes, things like that, you know that when it comes to looking for or researching a company that I'm going to add into my portfolio, the first thing that I do is I go to a website called seekingalpha.com. That's where I always start when it comes to researching a stock, whether it's a company that I know the name and I'm a little bit familiar with, or it's a company that I've never heard of before. I always start off with Seeking Alpha. So, starting off with Seeking Alpha, especially if it's a dividend income portfolio or dividend income company. Here we are talking about Visa, and I have added this into my long-term portfolio. It is one of the biggest holdings, one of my biggest positions in all of my holdings right now. But let's take a look at some of the top level easy things to spotlight when it comes to Visa. So we go to a summary. Like I said, always starting step one with Seeking Alpha. I feel like this site makes it as easy as possible to really navigate and get an understanding of a summary of a company. Now, we already know what Visa does, but let's just read it for the sake of the context of adding it and researching it for an investment. So it says company profile. Visa Inc. operates as a payment technology company in the United States and internationally. The company operates VisaNet, a transaction processing network that enables authorization, clearing, and settlement of payment transactions. It also offers credit, debit, and prepaid card products, tap to pay, tokenization, and click to pay services. Visa Direct, a solution that facilitates the delivery of funds to eligible cards, deposit accounts, and digital wallets. Visa B2B Connect, a multilateral business to business cross border payments network. Visa Cross Border Solution, a cross border consumer payment solution. And Visa DPS, that provides a range of value added services, including fraud mitigation, dispute management, data analytics, campaign management, a suite of digital solutions, and contact center services. Now, there's a lot more to read there, but the long and short of it is Visa is a payment processing business, a payment processing platform, and it falls in the sector financials. Now, I want to take a moment right now and pause to give you, if you are new, you haven't been following me, a little bit of background on my overall investment strategy for 2024. And so the long and short of it is I'm looking for the top two, or at least what I deem to be the top two companies in each of the 11 sectors of the stock market. So the 11 sectors include consumer staples, financials, consumer discretionary, industrials, materials, communication services, healthcare, so on and so forth. So my journey right now is to find what I deem to be the top two, the best in the entire consumer services category, or not consumer services, but in each sector of the stock market. So the first thing you're doing is just getting familiar with what the company does, and then still sticking with step one, looking at Seeking Alpha. One of the first things I want to do is I want to go over to the company's financials. Now, if you're not familiar with financial documents and things of that nature, you'll see all of these different categories and sections and components and aspects and line items and finance terms and accounting principles and all that kind of stuff. But if you don't know what these things mean and you're just beginning and you're just starting out on your investment journey, there are some key things, very, very high level, but important things that you should start your research journey off with looking at a particular company. And the first of which within their financials is the cash flow statement, right? So this is an accounting statement, a finance statement that all companies have to produce. And so you want to start off with the cash flow statement. There are three essential statements, right? You've got your income statement, your balance sheet, and your cash flow. Now you want to start off with cash flow, and primarily we want to look at net income. Now, net income is basically another synonym or another phrase, another word for profit. And so what we see here, and what I like to see, of course, is a year over year growth in a company's net income. So when it comes to Visa, back in 2019, we see that they had net income of just over $12 billion. In 2020, it took a dip down to 10.8, almost 11 billion. Now, me individually, me personally, for the most part, I give most companies a pass in 2020. As we all know, the pandemic hit, it turned the entire world upside down, and all businesses faced some pretty heavy blows. It actually took out a lot of small to mid-sized businesses. So I usually, when I see 2020 numbers, I give a little grace. I usually give somewhat of a pass. Then in 2021, they got back on track and 12.3 billion in profit, raised it to almost 15 billion in 2022, jumped over the 17 billion threshold mark in 2023, and as of right now, they have a trailing 12 months of 18.3 billion. So that looks good. That's the first thing that I'm looking for is year over year net income growth. Now, the next thing that we want to take a look at, and please just bear with me, these are very, very high level numbers that I want to spotlight at the beginning, the tip of the iceberg when I'm doing my research for looking into a potential company. So this is just what some things I'm considering. So I'm looking at the net income, and then I want to go down and look for the company's free cash flow or unlevered cash flow. And I want to see an increase year over year with that as well. So here we are looking at Visa's cash flow statement. And it looks like back in 2019, they have free cash flow of 9.5 billion, just kind of rough average of the two of those. Of course, it dropped down in 2020, shot back up to 11 to 12 billion in 2021. 2022, we've got 13 and 14 billion, 16, 17, and 2023, and then already 4 months in the year, but it's this trailing 12 months where it looks like we're in good shape in terms of increased cash flow. Now, if you don't know what free cash flow is, I'm going to break it down. Once again, I like to keep things simple, and I'm really hoping to get beginners, helping beginners on their investment journey and to give them things that they should consider and put it in simple terms. So if this is overly simplified, bear with your boy. It's not just to like be wrong or anything like that. It's just to keep the concept simple. So when I think about free cash flow, I think about free cash flow in terms of the amount of money you have on hand to pay for any given expenses that arise. Now, for most of us that work 9 to 5 gigs, our payment structure from our employers is typically set up with a 2 week kind of, every 2 weeks you get paid. And so if an expense pops up, if you don't have the ability to go into debt, like use a credit card or something like that, to pay for that expense, you're going to have to wait and you may have issues or problems until you get paid again. Just imagine having to go to work, but your car breaks down and you've got to wait until payday, your cash flow to come in to pay for that expense, that unexpected car fix, right? And so the more money a company has on hand, free cash flow, the more they're able to pay for expenses that might pop up at any moment. That's my broad, like oversimplified understanding of free cash flow. But what we see here is that there are two different components or aspects or really styles of cash flow, right? We've got levered, free cash flow, and unlevered. And so I'm going to read the definitions in just a moment. But the long and short of it is one accounts for having paid debt obligations and the other one doesn't account for it. So here we have unlevered free cash flow, and is the amount of available cash a firm has before accounting for its financial obligations. So it's bills. And then, of course, on the opposite end, the levered free cash flow or LFCF is the amount of money a company has left remaining after paying all of its financial obligations. The LFCF is the amount of cash a company has after paying its debts. So, two quick numbers that I always research when looking at a company's financials on their cash flow statement, which is their net income and then their free cash flow. And if those look good, I like to proceed. Now, I've already described that a big part of what I'm looking for in my new investment thesis is the top two companies in each sector, the fact that they've got good financials in terms of net income and free cash flow. But another component that I wouldn't necessarily say is an absolute mandatory or requirement is, does the company pay dividends. Now, I consider myself to be a dividend investor. I'm leaning more into what is known as a dividend growth investor. But the bottom line is when I invest in companies, I already know, right? The goal is to have them long term, at least 1, 3, 5, 10 years plus, right? That's the goal. The real goal is to be able to get yourself in a position to where you can hold on to these companies for a long, long time and then reap the benefits years later into your life. But for me, in the meantime, I need a little bit of a reward. I need a little bit of an incentive to hold on to these companies, to hold on to these stocks. And so I'm usually at this stage is not 100% guaranteed like it was not too long ago in prior years, 2023 and 2022. But now in 2024, I'm 90% sure still wanting the fact that the company pays dividends to be a part of my investment approach with this company on whether or not I want to invest. Now, here we're looking at Seeking Alpha's dividend scorecard, which is another reason why I always start here because they make it very easy to get a quick look at what's going on with a company's dividends if they do pay one. Now, the first thing I want to take note of is what's known as the payout ratio. Now, the payout ratio or cash dividend payout is the dividend payout ratio is a fraction of the net income a firm pays to its stockholders in dividends. This is calculated as a ratio of dividend per share to earnings per share. So the way that I look at this, like I give things my own examples, my own way that my mind makes sense of it, is the payout ratio basically indicates how much of their profits are they paying to shareholders versus how much do they have left to help grow the business. So you don't want the payout ratio to be a high number. Now, there are some exceptions to the rule depending on the type of investment that you're getting into, depending on the type of company. For instance, if it's a REIT, a real estate investment trust, those are going to have higher payout ratios. If it's a BDC, a business development company, those are going to have higher payout ratios. That's expected. It actually kind of is required as a result of their agreement with the IRS and getting tax breaks, but that's for another episode. What we want to talk about is just in general, when investing in companies, you want the payout ratio to be far away from 100%. So I always think about it in terms of $100. So if Visa has $100 in profit, they are having to pay out $21 in the form of dividends to their shareholders because they're paying a dividend and that's how they got to make up for it. Now, just imagine if this payout ratio was like 95%, what that would mean is for every $100 in profit that Visa makes, they're having to pay out most of that $95 in the form of dividends to their shareholders. It doesn't leave them with a lot of money, right? To expand the company, to grow the dividends, to not even grow the dividends, but to develop new products, get into other territories, things like that. So we want this payout ratio number to be far away from 100%. And this is pretty good. As a good rule of thumb, obviously, there's no absolute definition of what is good or what's bad. But for me, I like to see payout ratios that are 50% or below. And then next, we're looking at these two right here, the growth rate and the dividend growth. So for the last 15 years consecutively, Visa has increased their dividend. And so this is one of the best things that I like about investing in dividend stocks, especially as a form of passive income. You all know, if you know a little bit about me, I have a financial literacy community called Passive Income University. And so that's the main thing that we focus on is how do we build different streams of passive income or passive income sources, right? So just think about this for a moment in terms of getting passive income in the form of dividends from your stock portfolio. Visa has raised your passive income for 15 years straight. I also like to think about it in terms of like having a job and getting a raise, right? And the beautiful thing about investing in dividend stocks is unlike, what you have to go through at your job, going to work, sitting through traffic, having to deal with microaggressions, having to deal with all kind of politics, having to deal with all those kind of things. When you're investing in companies that are known for giving dividend raises and dividend increases, you get the benefit of getting a raise without having to do anything. All you have to do is buy and hold, and now you're passively getting income increases. And with that being said, we see here that Visa has a 5-year growth rate of 16.909%. So over the last 5 years, they've grown their dividends 16%. So just imagine over 5 years getting a 16% raise for doing nothing, right? Just sitting there and holding. All right. And so we see their dividend yield. This is another component or another number that you can think about in terms of 100% or maybe $100, I should say more accurately. So what this is telling you is that for every $100 you invest in Visa, you're going to get about 77 cents per share that you have, or basically for every $100, right? So if you invest 100, you're going to get 77 cents. If you invest $200 or you buy $200 worth of Visa shares, you're going to get like $1.44, so on and so forth. And with that being said, I know that seems very nominal, very minimal, but remember, the name of the game is just to start somewhere, start slow and build it up. And eventually these numbers start to compound in ways that you probably never even thought of. But the key is to get off the block and get started. All right. So the financials are looking good, tip of the iceberg. The dividend scorecard is looking good as well. And then the next thing I do, and I kind of bounce around in my research. You don't have to do these things in any particular order. This is just what I do. The next thing I do, just as this is a small component. I don't put a 100% weight or absolute weight on this, but it does give me a good idea of what the general sentiment is in terms of analyst forecasts. Is I go to a site called Tip Ranks. And what Tip Ranks does is it collects data from Wall Street analysts on their forecasts or predictions for a particular company. And then it gives a nice summary on what those forecasts are. So currently, right now, Visa is at about $268 a share. And according to the analysts, as pulled in by TipRanks, they've got 23 ratings. So 23 different analysts have given a rating on Visa. And of those 23, 19 are saying that Visa is a buy. Four of them are saying it's a hold, and nobody's talking about selling Visa. So if you've got it, nobody's saying sell it at all. Now, the cool thing is they give this forecast average. And the average forecast from all of these analysts is saying that in the next 12 months, Visa is expected to be up at $313 a share, which has a 17% upside from the current share price. So if you were to get in right now, there's a general expectation that within the year, you're going to get a 17% return on your money, which is really, really good, right? Really good. But like I said, I don't put all the weight on the world on this. I like to just get an idea of what the analysts, for the most part, what the sentiments are for a particular company. Now, so we took care of looking at just the high level on Seeking Alpha. We've got a little bit of data on tip ranks. And then the next thing we want to talk about is some of the advantages that Visa has over its competitors, which I think is really good. Now, the key here is there's really only two major global dominant payment processors in the world, which is Visa and MasterCard. And in an odd way, they really aren't competing with each other like that. Visa basically is really combating cash. They have a battle with cash right now and checks. They have a battle with cash and checks because there's still a large component of the world that uses cash and checks to process payments. And so that is the industry, or that is the segment that Visa is trying to tackle. And right here, I believe it's pronounced Manyi Lu, did a recent as February. She did a little bit of an analysis. Here we go, via Business Insider and Tip Ranks, has an analysis on the potential competitive edge that Visa has in justifying the buy rating here. But the thing that stood out to me the most is that additionally, Visa's network of network strategy unlocks a vast 185 trillion potential in new transactional flows across various sectors, far exceeding the consumer payment sphere. So that right there is just amazing. Just imagine Visa has identified just within its own kind of sphere of influence network of networks, $185 trillion worth of market share that they can gain. That to me is insanely powerful, especially when you consider that technologies are going to advance as different parts of the world get more caught up to speed with computer technology, internet technology, things of that nature, getting more connected in a global economy. Visa is already going to be poised to take advantage of that $185 trillion that is still available for them to capture. And then even here, this particular analyst is saying the price target is $305. So there's still some pretty decent upside for Visa. So this is just a quick little summary analysis. I'm trying to get better in these long format videos. So if you like this type of thing, feel free to come and visit and join the Discord community, Passive Income University. When you join, you get the first 30 days free. So you can check out all of our exclusive content. You can check out how the members interact with each other, how we all learn and grow. And if it's something for you, we definitely invite you to stay and hang out with us. All right. I'll see y'all in the next one.